joined now by Matt Maley, Chief Market Strategist at Tabak. Matt, thanks so much for your time. Record profits for SK Hynix, but shares are dropping. Why is that?
Well, Sally, it's something we've been seeing, for the last several weeks, almost 2 months now, in the semiconductor, the chip sector around the world. I mean, we saw it last month with both Broadcom and Micron here in the U.S. We also saw it with Samsung earlier this month. Taiwan Semiconductor, again, that was about a week and a half ago, and now SK Hynix. It's just that the expectations were so high, priced for perfection, so that if you get any kind of, I guess my point is, even the ones who reported great numbers and great guidance, they've gotten hit. So the ones that have reported, something lower than expectations, they're getting hit even harder.
Is there something more at play with Kospi, though? Because in the last few hours, South Korea's finance minister has been apologizing, suggesting there's more than just the global tech sell-off at play.
Well, there is to a certain degree, because there is that added leverage we see in South Korea, not just from these leveraged ETFs in the tech sector, but also the single stock leveraged ETFs. And, whenever you have leverage, it's funny, leverage can add and help the market go a lot higher, but then, it works in both directions, and that's what we're seeing. So they're starting to make some moves to kind of take away some of that leverage. That will hopefully help things stabilize. But when you have excess leverage, and a lot more than we have in most other parts of the world, it exacerbates the moves.
Yeah, and South Korea's finance minister holding that emergency meeting earlier in the day. Some of the trading rules have changed, but we've seen 3 interventions from the government since June in South Korea. Do you think that this latest intervention will actually make a difference?
Well, it's always hard to know, when that will happen, to see the absolute bottom, because there is a lot of leverage in that system. So just because they're discontinuing or clamping down on future leverage, that doesn't mean that people still don't have some that will need to be unwound. But, what I'm looking at right now in the Kospi index is watch the 5,000 level. It's just a little bit above 5,000. That's where it bottomed a couple of weeks ago and bounced. I'm sorry, that's where it bottomed back in March and bounced. And so that should provide some good support. Keep an eye on that over the next couple of days. If we break below that, it's going to create some real problems. But what they've been doing recently, that should provide some good technical support.
Does this have a lesson in terms of inherent risks when a country stock exchange is dominated essentially by 2 companies? Samsung, SK make up about 40% of its value.
Yes, Sally, that's definitely a problem, and I hate to say it, but it's also a problem in the U.S. We don't have just 2 companies, but you just notice that the Mag 7 names make up about 35% of the S&P 500. So there's a few more names, but it's still highly concentrated. And so it's a situation where people need to be very careful, and it makes it much harder for people to see rotation, because when these key stocks go down, the indexes go down because they're so highly weighted, and that takes away a lot of confidence in the marketplace.
Well, thank you so much for speaking to us. Matt Maley, Chief Market Strategist at Tabak.